The economic and legal framework of a nation begins right here. The original Income Tax Act of 1961 was a functional document for its time, but over 6 decades it degraded under its own weight. To keep up with a changing economy, lawmakers patched it with 65 major amendments, totaling more than 4,000 individual changes. That constant patching created a maze of contradictory exemptions and confusing language. It stalled the administrative system and trapped taxpayers in years of litigation. By July 2024, the government recognized that adding another layer of fixes was no longer an option. A structural rewrite was the only way forward. A rapidly expanding global economy cannot run on a fractured 60-year-old operating system. The Income Tax Act 2025 was built on a specific rule: simplify the structure, but leave the actual tax rates and fundamental policies untouched. This infographic from the Central Board of Direct Taxes shows the result. They took a law containing 819 sections and carved it down to 536. They applied that same efficiency to the macro organization, reducing 47 chapters to just 23. A large part of this cleanup involved consolidating scattered rules. Take tax deducted at source, or TDS. Previously, these provisions were distributed across dozens of different clauses. Now, those overlapping rules are grouped under a single umbrella, Section 393. This deliberate deconstruction turns an intimidating legal maze into a clean, navigable manual. The overhaul also purged decades of confusing terminology. For years, anyone filing taxes had to decipher the overlap between the assessment year and the previous year. Those terms are gone, replaced by a single standard: the tax year. The law now recognizes 21st century commerce directly. It introduces clear statutory definitions for virtual digital assets, including cryptocurrencies and tokenized assets. It also mandates a shift toward digital-first enforcement through faceless assessments, a system where returns are evaluated anonymously, removing the need for a taxpayer to meet an officer in person. This system reduces the need for human interface, which speeds up processing and mitigates the potential for corruption. This legislative timeline marks the transition, with the new act officially taking effect on April 1, 2026. With this transition, India's tax administration moves from a historically suspicious enforcement model toward a trust-based compliance framework. This ties directly into the country's broader goal of improving its ease of doing business metrics.